Private equity has established itself as a fairly well-reputed asset class, and we believe that this should be a core part of anybody's portfolio. This is that asset class which is going to give you that extra kicker or alpha, if you will. So we are recommending all of our clients to have it, maybe 5%, maybe 10%, but start building in positions towards the alternate assets. This is that one asset class which is still yet undiscovered, but has got the highest return potential. So this will help you over the long term meet your personal or even professional return objectives. So if you look at it, alternate asset classes are designed to give you two big benefits. One is diversification, that is, not only listed equity, but adding another bucket to your asset allocation, which is unlisted equity. And number two, unlisted equity with an objective that one should be able to target a slightly better return or an alpha over the listed equity. So this is that part of the portfolio which, if you keep for the next 5 or 10 years, will lead to substantially better outcomes and help you meet your personal return objectives. We launched InCred's maiden private equity fund called InCred Growth Partners Fund. We call it IGPF for short. This is the first time InCred has ventured into private equity, and with the single-minded objective that we are finding valuations on the private market ecosystem to be much more beneficial and much more attractive. This is a fund which is a category 2 AIF. We started this fund beginning of last year. We set out to raise 500 crores, but I think our positioning, our connects with the investor community was so good that I think investors were very comfortable with the strategy that we launched. So we went ahead of our target and we had to exercise a green shoe option. So far, we have done 6 deals from this fund. We closed this fund on 31st March at about 575 crores plus, out of which we've already called down roughly 50% of the fund, invested into 6 companies. All of them are doing fantastically well. There are names like Manjushri Technopack, which is an old, 40-year-old company into packaging solutions. We are invested into Sellable, which is an AI services provider. So you have a very old economy business as well as a very new age economy business in the same portfolio. Then we've got names which have more secular themes like Niva Bupa Health Insurance. We've got Purple, which is India's second largest beauty and cosmetics play. We've got Shadowfax, which is India's largest delivery company. So, we believe that our portfolio is a very good mix of early stage companies which are Series B, Series C, as well as late stage companies which are probably a year or 2 years from IPO. Our portfolio is doing exceedingly well. It's a fund which is designed to back best in class privately owned companies of India. We will be doing 2 stages, growth stage companies which are probably Series B and C, which are maybe 3 to 4 years away from a listing, as well as late stage companies which are already very evolved assets, maybe a year or 2 away from an IPO. The mix, we would probably keep a little bit more towards late stage companies as we prioritize liquidity in the near term. And in terms of the focus areas, we are very focused on consumption, financial services, and the tech and enterprise space. And whenever we look at a company, we have 4 filters which we apply to every investment that we take into the fund. Number 1, it has to be a fairly scaled asset. It has to be at least in the market for the last 5 to 10 years in terms of history and track record. Number 2, it has to be profitable. That is, on an ongoing basis, the business must be making money. Number 3, it should have a clear timeline to an IPO. It could be 1 to 2 years, it could be 3 to 4 years. But whenever we go in, we need to document that in our investment agreement that there will be an IPO timeline which is outlined. And number 4, it has to be priced reasonably. So whenever we enter a company, the multiple that we pay to that while entering into the company, it has to have a certain bit of discount compared to a listed multiple. That discount could be because of size, it could be because of listed versus unlisted, but that is the game, or that is the arbitrage that we try to extract whenever we enter a portfolio company. India is a consumption driven economy. So two themes which are perennial in this country are consumption and the financial services which underpins this consumption. So those two are themes which are evergreen in nature. However, India is a very entrepreneurial economy and you will find new themes emerging all the time. And what we are seeing on the ground is a lot more action is going to happen into new themes like sustainability, which is clean energy, green tech, etc. Number two, on the space technology, I think there are many more companies which are going to act as service providers. And number three, which is the latest, is probably themes which are oriented towards defense and control mechanisms. So we are going to find many more entrepreneurs going to focus on themes like sustainability, space tech, defense, and then obviously consumption and finance remain the core sectors. We are definitely closer to the end. There are strong data points to validate that. If you look at the last 4 or 5 years, I think the industry has definitely gone through multiple transitions. You had a 2020, 2021 time when it was the peak of COVID and everything was moving online. We had so many unicorns which got built up during that time, maybe 100 plus. And then that whole wave of euphoria, enthusiasm went down in 2022-23 when I think the valuations could not be justified by the fundamentals. So there was a big correction in the markets, and that was the time that we started our fund launch as well. And you would have seen that 2023 was really slow, but 2024 we are finding the action coming back into the ecosystem, especially towards the later half of the year. And if there were only like 2 unicorns which came in 2023, I think 2024 already saw more than 5, and we are seeing a lot more action happening in 2025. Number of deals which are happening in early stage, late stage, mid stage, I think the number of deals is definitely 2x the number that was there last year. And even in terms of the quantum, I would say we are seeing a large number of big ticket deals which are happening. So we are fully convinced that we are past the worst of the times, and 2026, 27 are going to look much better.